morning. This is Horizon's Middle East and Africa. Our top stories this morning. Mixed signals. Asian stocks and U.S. futures fluctuate after a global tech-led sell-off revived concerns the AI-driven equity rally had gone too far. President Trump defends the move to unfreeze some Iranian accounts, saying the funds will be used to buy food and medicine from the United States, a claim Iran disputes. And U.S. Secretary of State Marco Rubio arrives in the UAE as Washington seeks to reassure regional allies the interim deal with Iran is good for their security and economies. It's just gone 8 a.m. across the Emirates. I'm Abir Abamar in Dubai. I was getting ready to start the show saying a rebound from yesterday when it comes to Asian equities. Not the case. They were ticking higher earlier in the morning, but now we're seeing the MSCI Asia Pacific 0.7 lower, led down by TSMC, which was pretty much, it had escaped the route that we saw yesterday that led markets like the Kospi to drive down 10%. Hang Seng in China entered a bear market. So we're seeing that route actually continue into today. And then when it comes to U.S. futures, they're ticking higher just slightly this morning, 0.1% higher, again, after a 1.4% drop in the S&P 500 yesterday, over 3% drop in NASDAQ 100. Now, everyone is waiting for one thing today in U.S. hours later today, and that's Micron results, because they're really going to be a gauge about the AI infrastructure and whether it is actually holding. We await those details on the results later. Micron did drop massively yesterday. It is still 250% higher year to date. So some positivity there. When it comes to oil prices, Brent is at $76 a barrel. It is dropping again today, 1% lower. And that is as the flow of ships in the Strait of Hormuz continues. We'll have more details on the geopolitical story later on. And the yield on the 10-year notes in the United States ticking lower, 1 basis point. We await personal spending data tomorrow in the United States, and that will give us a little bit more clarity on all the fun talk about inflation and the Fed hawkish tilt that we've been talking about over the past week or so. Now, for more on what is happening in Asian markets, Winnie Su is in Hong Kong for us. Winnie?
Good morning, Abir. As you just mentioned, it's been such a busy day for Asia. Again, we are seeing a bit more pressure for Asian stocks. MSCI Asia down for a second day, and in fact, seeing its 2-day decline, the biggest in about 3 weeks. Now, technology shares continue to lead the decline with some caution around the upcoming Micron earnings. So that's why we are seeing Taiwan's TAIEX index down more than 2%, but also seeing Indonesian stocks turning to the negatives after MSCI delayed its market status review to November. When it comes to the Japanese yen, still hovering around those weakest level in about 4 decades, and still lots of risks rising around the potential yen intervention to come. Now, flip the board, we take a look at the biggest action today is again in South Korea's Kospi index. And when you look at the 2-day chart, yes, it was down about 10% yesterday. That's why we saw a bit of a rebound earlier in the morning when dip buyers step in on that positive earnings story, and also report that Samsung Electronics might be doing a share buyback. However, that really didn't last long before Kospi again turned into the negatives after the report that presidential policy chief is in fact saying that chip makers should be sharing their profits. So you can see that the market has become very volatile, with the implied volatility also at record highs, and that all these small news coming in can really drive big moves in the South Korean market. Back to you, Abir.
All right, Winnie Su in Hong Kong with those market details. Now, a cautious rebound in Asian stocks is fading as losses in bellwether chipmaker TSMC weigh on the market. This comes amid renewed concerns that the AI-driven equities rally may have run too far. Joining us now to discuss further is Dan Farley, State Street Investment Management Executive Vice President and CIO of the Investment Solutions Group. Dan, good to have you on. Thank you for making the time for us. Yeah. Let's talk about the latest from yesterday, the drop that we've been seeing across global equities. are we starting to see signs of a bubble bursting?
I don't think so. I think that's probably a bit premature in terms of where we are right now. You said it a few minutes ago in terms of talking about Micron, right? It was down 8% after being up 250. So I think it's important for us to recognize that these things don't go in a straight line, that in general this trend is one that we think is going to be continuing. We're broadly supportive of equities here. But I think that the call for a bubble at this point is probably a bit too early. Earnings continue to follow through on this, and so we think this is it's a step along the way. Obviously, we'll see what the numbers come out to with today, and as we start to move things forward. But for the most part, we think this rally still has room to go.
Room to go. So you think that the valuations still make sense when it comes to those numbers that we're seeing across the S&P?
Well, I think valuations are not cheap by any measure. But when you start to look at that in the context of how earnings have continued to be able to grow, it starts to say, yeah, they can be supported here. I think it's interesting if you look at the returns that we've seen out of the S&P 500, for example, and across multiple markets for that matter. Most of it has been earnings led. You know, the fact that we have seen markets and companies' ability to continue to deliver on their earnings component. We saw strong Q1 numbers. We've seen strong upgrades for the rest of the year, right? And there's actually been price multiple contraction in many markets. I think that's actually a healthy environment. If we'd seen the inverse, where earnings were going down but multiples were expanding, that might get me a bit more concerned about your bubble question.
So we're talking about semiconductors. The SOX index is gaining as much as 100% this year. It saw some declines yesterday. And you say there's more room to grow when it comes to this AI rally. So where are the risks coming from? What are the risks for you?
Yeah, I think that obviously it's the earnings pieces that we're all talked about. That's what we're all worried about in terms of where we're seeing this volatility that's coming through. So to the extent that these companies are not delivering on that, I think that's one big one. I think the other outside of the industry is going to be around things like rates. To the extent, and this is true in semis, but I think this is true in the market broadly speaking. You know, we're not priced for a 5% U.S. 10-year. And I'm not suggesting we're going there anytime soon, but if were we to see a big move up in rates, I think that would cause a bit of a repricing across the board. And obviously, given the movements that we've seen in AI, they're probably more vulnerable than most.
So generally or historically, investors have been quite afraid of the risk of recession. And then now, do you think that the positioning game becomes positioning at a time where rates, growth, and inflation are structurally higher?
So I think the growth story for us is actually one of a bit of a slowing story. If we look at macroeconomic growth across the world, our expectation is that we're going to continue to move into a world where it's below average, right? That was our story in January. Obviously, the conflict has gotten in the way in the middle, but I think that continues to be the thing that we are envisioning. So that says slower growth. We think that inflation is probably peaking here, okay? And then ultimately, particularly in the U.S., but really around the globe, looking at the labor market is starting to soften a bit. And so we think that this gets into a good, not great environment for companies to be doing business. But that also means it's probably okay for stocks.
So you brought up the conflict, and you were telling me before the show you're visiting the region. Now, when it comes to the conflict, is it, you know, have we forgotten about it, or has the geopolitical risk become conventionally more or harder to sort of gauge or hedge against?
Yeah. Well, I think this one in particular is particularly hard because when negotiations historically have been behind closed doors, and it feels like it's being done on social media these days. And so there's all sorts of different posts that are causing volatility in the marketplace. I think you've got to kind of try to look past that, past the noise a little bit, and sort of see direction of travel. Our expectation is that the current negotiation that's going on does hold. I think both sides have a lot of incentive to get this right and get this taken care of. And so our highest probability that this is likely, it will take maybe a couple of months to play itself out, but for the most part that this sticks. And so, you know, the ability to expect that, and what has been especially interesting has been how markets have just sort of looked past that, right? Oil down at sub 75 now is really quite interesting in a world where this is not a done deal yet. And so equities have seemed to look past it. Oil has seemed to move past it. I'm not quite sure I'm ready to call it a non-issue quite yet, but that's what we've seen markets be willing to do.
Then what should Kevin Warsh do? Does he hold? Does he raise next year? Do we see a rate hike in December?
Yeah, we're actually on the opposite side of that view. We think that the Fed is likely to hold here for the rest of this year. And if we're right and we're in a slowing economic environment and that inflation has peaked, we think that the Fed is actually, we're penciling in 2 cuts next year, one in January, one in June. I think the fact that he kind of came out and was very hawkish in his statements was perfectly appropriate. It was a little bit of the Fed being able to use their communication strategy to reset the market a little bit. But also, as your first meeting as a new Fed chair where independence is a question and inflation is very high, I think you have to come out hawkish. And so his comments weren't surprising, but I don't think it's indicative of the path of travel.
All right. Well, Dan, thank you for your time this morning and for visiting us. Dan Farley, State Street Investment Management Executive Vice President and CIO of the Investment Solutions Group. Now, for a look at some of the other stories we're following, Meta is also launching a lower-priced smart glasses model. On Tuesday, the social networking giant unveiled what it calls the Meta Adventure and Fury glasses, each priced at $299. This marks the first time the firm is moving down market, launching lower-priced models under its own brand. Meta is also introducing a $399 Starfire model in collaboration with Kylie Jenner. Alibaba has sued the U.S. Department of Defense, seeking to be removed from a blacklist that identifies the company as a supporter of the Chinese military. The e-commerce giant argues that it was added to the list without substantial evidence, violating due constitutional process. The U.S. this month accused Alibaba, Baidu, BYD, and other Chinese companies of aiding the People's Liberation Army. And AFP is reporting Airbus has found cracks in A380 aircrafts used by Emirates and Qantas. On Tuesday, Airbus said it would inspect 16 A380s, 5 of them immediately. The cracks were said to be found in a key wing component on the aircraft. And according to the report, the European Union Aviation Safety Agency ordered urgent inspections. And coming up, President Trump says Iran will use unfrozen funds to purchase food from the U.S. But Iran is disputing this. We have the latest developments on that story next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Abir Abramar in Dubai. Now, before we start with our next segment, some lines coming in from President Trump now saying that he's ordered the Department of Justice to look into gasoline prices. He's also saying that gasoline prices better, quote, start going down a lot faster. This is on a Truth Social post from President Trump just now coming in across the Bloomberg terminal. Which leads us to our next story. President Trump says Iran will be able to use funds released from frozen accounts only to purchase food and medical supplies from the United States. But Iran has disputed Trump's comments, saying the funds would be used, quote, freely in whatever manner it deems appropriate, and that there were no plans for new nuclear inspections.
Our missile program was not included in the MOU, and it shall not be. I would like to say that if it was not for Iran's missile capabilities to defend ourselves, our country would have been plundered and destroyed by the Zionist regime and the U.S., like Gaza, and they wouldn't have mercy on the young and old.
Joining me now to discuss further is Stuart Livingstone Wallace, Bloomberg's executive editor for the Middle East, North Africa, and Russia. Stuart, you just heard the latest lines from President Trump. Clearly, he's under pressure to get those energy prices in the U.S. lower. The negotiations, the technical negotiations have stopped yesterday, but we're still seeing negotiations among lower-level negotiators in Switzerland. What's the latest on that, and do we continue to see those discrepancies?
Yeah, and again, like we've repeatedly said, you should anticipate more of that going forward. The key thing is not so much to look at what they're saying, because, as you said, pretty much every statement that's put out by one side is almost immediately contradicted by the other. Let's see the reality. So the good example I would point to is what happened over the weekend, where Iran said Hormuz is shut. All the evidence points to ships continuing to go through Hormuz at a trickle, but still they're going through. So that I think is kind of the playbook for what's happening in these negotiations. Now, the markets will continue to react. There's no doubt. You know, they're going to trade off this. But when we take a slightly medium, longer term view, again, it seems to be going in the right direction. I don't want to get too optimistic, but that seems to be the direction of travel.
And Secretary of State Marco Rubio is doing a regional visit. He is in the UAE. What can we expect out of that?
He is. I mean, it's very hard to know exactly what he's going to say about it. We've not had a sort of a readout yet on what that is. We assume the substance of it will be confidence-building measures, you know, to basically go around the region. Because it must be said, right, the US and Israel started this war with Iran, but the countries that got hit the most and suffered the greatest damage, both economically and in terms of their security, was the Gulf. So one would presume that he's going to be going around the Gulf states telling them this is a decent deal, you know, we can go forward. We do know a lot of the Gulf members were intimately involved in negotiating that deal. They've been acting as very strong mediators. So we think that's the substance of it, but let's see what comes out at the end of this mini tour.
All right, let's see what comes out of it. Stuart Livingstone Wallace, Bloomberg's executive editor for the Middle East, North Africa, and Russia, always with those details. Now, for a look at some of the other stories we're following, Israeli Prime Minister Benjamin Netanyahu has again called for his country to increase its military autonomy and reduce reliance on support from the U.S. It comes as Washington's interim deal with Iran to end the war has come under fierce opposition in Israel. President Trump has been publicly critical of Netanyahu in recent weeks as Israel's war with Hezbollah in Lebanon threatened peace negotiations with Iran. Israeli stocks and currency have turned to the world's worst performers this month. That is on concerns a peace agreement with Iran will leave Israel in a weakened position. The Israeli shekel has retreated about 5% against the dollar so far in June, and Israel's equity benchmark, the TA-35, has plunged more than 12% in dollar terms this month. Coming up, another big launch for SpaceX, this time in the bond market. We'll discuss Wall Street's big bet on Elon Musk's rocket science next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Abir Abu Omar in Dubai. Let's take a look at some of the stories we're looking at today. Saudi Arabia's cabinet has approved the areas of the country where non-Saudis will be allowed to own property. The country's official SPA news agency did not identify any specific locations, and Saudi Arabia is overhauling its property ownership law as it aims to draw foreign buyers into the Gulf's largest economy and reduce its dependence on oil. Oil exports from the UAE in early June recovered to nearly 85% of the country's pre-Iran war levels. That's according to a report from the International Energy Agency. The UAE achieved this by using a pipeline to the port of Fujairah and its Mandus underground storage facility. It also ramped up exports through the Strait of Hormuz with tankers' transponders turned off. Russian President Vladimir Putin says he is ready for peace talks with Ukraine based on agreements reached in Istanbul. Those talks, held last May, were the first direct discussions between Russian and Ukrainian officials in more than 3 years. Putin says any negotiations with Ukraine must take into account agreements reached during talks with the U.S. in Alaska and, quote, realities on the ground. German industrial giant Siemens is making a push into the AI space, betting that the new technology is moving beyond chatbots and onto the factory floor. CEO Roland Busch told us more about their AI strategy.
We call it industrial AI. Why? You need a couple of things. Number one is you need a technology stack, and the stack includes hardware and software. Both is super relevant. Number two is domain know-how. We know how to build things. We are on the shop floor. The next one is data. We have a lot of data, our own data, data shared with our customers and partners. And we have the trust of our customers, because when the AI hits the real world, hallucination is not an option. So you need hardcore results. They should work. So we have all this, and we can bring it now to the real world. And last but not least, we have great partners like NVIDIA, like some others, who are with us in making this transformation for our customers.
I asked you at CES in January, give me a case study, an example, some evidence of AI in a factory anywhere in the world. Fast forward to June, is it real now? Is there a deployment that you can point to? Please.
It's real now. And we can talk about the design phase, the manufacturing phase, and the operation phase when your assets are in the field. But you talked about an example on the shop floor. Actually, we now launched our Eigenengineering agent. What is it? It is an agent which programs an industrial PC for you. So if you have a cutting shop on the shop floor, and the cutting is not precise anymore, now an engineer has to go there, reprogram your PLC, and so on. Eigenengineering agent does it for you. You say, I mean, my cutting machine is not working precisely. Eigenengineering agent analyzes the problem, breaks the problem down, looks for all the data, the machines, the job which has to be done, analyzes it, develops a code, runs it, compiles it. If it doesn't work, it compiles it over again, fixes it until you can say, now go, and you push a button, and then PLC is running with the same precision as before. So we are talking about 50% higher productivity, while the quality of your programming is increasing by 80%.
That was Siemens CEO Roland Busch speaking with Bloomberg Tech co-anchor Ed Ludlow. Now, before we head into the break, let's take a quick look at where equities are trading this morning. U.S. futures are now flat. They were ticking higher slightly earlier in the session, quite literally unchanged at the moment. NASDAQ 100 futures are also flat. A cautious return, perhaps, after the 1.4% drop in the S&P 500 yesterday, led by those AI names. Dow Jones futures 1/10 lower, and Euro Stoxx 50 futures 0.5 lower. Oil prices are also ticking lower this morning. Brent is at $76.5 a barrel as shipments through Hormuz continue. And coming up, we'll discuss SpaceX's bond launch and the market shipwreck with Eileen Burbidge, founder of Passion Capital and NFG Ventures. That is coming up next. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Mixed signals. Asian stocks and U.S. futures fluctuate after a global tech-led sell-off revived concerns the AI-driven equity rally had gone too far. President Trump defends the move to unfreeze some Iranian accounts, saying the funds will be used to buy food and medicine from the U.S., a claim Iran disputes. And U.S. Secretary of State Marco Rubio arrives in the UAE as Washington seeks to reassure regional allies that the interim deal with Iran is good for their security and economies. It's just gone 8:30 a.m. across the Emirates. I'm Abir Abu Omar in Dubai. Quick look at where markets are trading at half past. U.S. futures are now flat to the upside, less than 0.1%. Now, again, the AI rally and the reasons that have been fueling it were put into question yesterday as investors doubt the AI infrastructure. But again, everyone is waiting for Micron results coming out later today to gauge whether the reasons that have driven this AI rally in U.S. equities and and Asian equities over the past 6 months or so are still very much relevant. Micron did fall about 13% yesterday. Now, something to note about it is that it is more than 250% higher year to date. So still a whopping performance for Micron and other chip makers in the S&P 500. The SOX index, which is a gauge for semiconductors in the United States, did drop yesterday in the midst of all of this, but it is still very much higher for the year. So that is something to just bear in mind as we await those quarterly results later. Asian equities 1% lower this morning. Now, this is a reversal from earlier in the session when they were actually gaining. But TSMC, which had escaped yesterday's rout pretty much, is now dropping. It contributes about 10% to the overall gauge. So that's weighing down on the MSCI Asia Pacific. Kospi was also gaining earlier in the session, but is trimming those gains. Brent crude is about 8/10 lower this morning. It is at $76.5 a barrel. We continue to monitor the movement of ships through the Strait of Hormuz. It's definitely ticking up over the past couple of days or so as those interim deal negotiations carry on between the United States and Iran. And then the yield on the 10-year notes in the United States is 1 basis point lower this morning. We await personal spending data later this week and take a look at what it means for the inflation outlook, but also what the Fed decides to do later this year. Now, for the weakness that we're seeing in Asian equities, we've got Winnie Su, as usual, in our Hong Kong studio. Winnie?
Yeah, good morning, Abir. We are seeing Asian stocks extending losses and now down for a second day. Still, technology shares leading the declines ahead of those earnings from Micron. And that's why we are seeing Taiwanese stocks leading the decline down more than 2%. We do have Kospi here fluctuating. Yes, there is pretty much some mixed news that we are hearing. On the positive note, we have the report potentially that Samsung might be announcing a share buyback, but also some concerns after the remarks from the presidential policy chief that the chip makers' revenues and their profits should be shared further. Remember, we also had MSCI keeping South Korea as an emerging market status, saying that there are still some problems remaining unresolved. When it comes to Japanese yen, still around those levels that are the weakest in about 4 decades. So we are monitoring those risks for potential yen intervention. Now, flip aboard, we take a closer look at the chip stocks because overall it is down, especially in Taiwan. You have just mentioned TSMC here down almost 6%, a bit of a catch down from yesterday, and also again caution building ahead of Micron's earnings. But the outlier today is in fact in Chinese chip makers. You have Hua Hong here, in fact, up about 16%. So that optimism around the self-sufficiency theme, and we're also seeing a report from the FT that around the surging black market prices for NVIDIA's H200 chips in China. Back to you, Abir.
All right, Winnie Su in Hong Kong with those market details. Now, SpaceX shares ended higher on Tuesday, snapping a 3-day sell-off that wiped out more than $600 billion from the company's market value. The Elon Musk-backed company also raised $25 billion of bonds in its debut offer, making it the latest mega-cap tech firm to tap investors for its AI expansion. Joining us now to discuss further is Eileen Burbidge, founding partner at Passion Capital and founder of NFG Ventures. Eileen, good to have you on. Thank you for making the time. Look, SpaceX, let's start with SpaceX. It's still trading above its IPO price, but we're still talking about a company that's revenue, or whose revenue is way below that of mega peers in the S&P 500. Do you think that this performance for SpaceX is going to be realistic going forward?
Well, I guess the question is whether or not it's sustainable. And I think that Elon Musk himself, as an individual, as the CEO of the business, as the largest shareholder, that with more than 80% of the voting rights, he does command a huge following, particularly with retail investors. And also, I would say, institutions that might have a fear of missing out. And so there does drive this compulsion to keep boosting the stock up and trading at levels of 100 times revenue. So I do think we're going to see that for quite some time, even though there'll be a lot of volatility to come.
And Eileen, SpaceX's bonds, I was reading across the Bloomberg terminal this morning, are more expensive than Oracle's. Now, despite that, rating firms have given it a solid rating, but investors seem to be taking a cautious view on these debut bonds. Why do you think that is?
Yeah, I think it's a bit of a mixed bag. There is caution, like you say. Having said that, they were oversubscribed. So from what I understand, there were about $90 billion in orders. And I think there's a premium now being ascribed to this debt because of the potential risk in underwriting it. However, it really does carry through that same compulsion or that same motivation I mentioned with respect to retail investors wanting to follow SpaceX and wanting to be part of its offering, its bond sale, its listing, whatever way, shape, or form it can take. And again, that's what's going to keep the sort of the trading volumes up as well. That's what you see swinging back and forth. It's going to be probably added to, the NASDAQ index, the FTSE Russell index, one of them coming online probably as early as Friday this week. And then thereafter, maybe in another week and a half to the other index. That's going to force the ETFs and a lot of the index funds now to go into it as well and redistribute their holdings across those big indices.
And Eileen, both OpenAI and Anthropic have made their wishes to list clear. Right now, what do you think Altman and Amudai are looking at SpaceX and thinking, what lessons are they learning from the performance of SpaceX over the past 10 days or so, and what to look forward to when actually IPOing?
Yeah, I probably shouldn't speculate, but my guess would be that they're probably pretty happy, pretty confident. Again, if SpaceX can trade at 95 to 100 times, maybe 105 times revenue, they're in a much better position. Both OpenAI and Anthropic have much stronger revenue. They have given indications of profitability, even though SpaceX is nowhere near that. So they're hoping to come to market to trade at 20 to 30 times, maybe in the case that was Anthropic. Maybe in the case of OpenAI, you're talking 40, 50 times, but neither is looking for the lofty valuations that SpaceX is getting. And so I think they're probably feeling quite confident that they're going to be able to list without any issue.
So speaking of those valuations, let's take it a little bit more macro, and the route that we saw yesterday keeps popping up every now and then, Eileen. Do you think there is more downside risk to the AI rally that we've been seeing over the past quarter or a couple of quarters? Do you think there's more room for things to deteriorate further?
I do think there will continue to be volatility. I do think you'll see a lot of trading volume for the big tech stocks, particularly in AI. I think a lot of what could have been driving these last few days is any excuse to take some profit off the table. As you mentioned, even though SpaceX lost as much as it did in its market value, it's still trading above its initial listing price and where it debuted. And if you look at the other tech stocks, such as, say, Alphabet, for example, it's only about 13% off of its 52-week high, which was posted just a month ago. So the rallies you've been talking about for the last few months, they've really been super heady. And I don't think it's unreasonable for investors to take some of that profit off the table. And when you think about losses, or when talking about, say, a bullish sentiment, we're still talking almost double the share price of a year ago for much of these stocks.
So what are the next pockets of opportunity? I mean, when you look at semiconductors and how well they've performed, memory chips, where do you think that when it comes specifically to the AI pockets of opportunity, if you were, where do you think the next big thing is going to be?
I mean, I think it'll continue to be in the memory chips, in the semiconductors, in the graphical processor units, or whatever other CPUs that are going to be driving the underpinning or the underlying of the AI infrastructure. I'm not so sure about data centers, given, again, in their own respect, if they're isolated data center businesses, because of how capital intensive those are getting scrutinized now. However, I do think with these foundational models coming to list, such as OpenAI and Anthropic, you're going to see people spreading their bets across the application level, the foundational language model level, and the infrastructure level. That's going to continue to run.
All right, Eileen, we're going to have to leave it there. Eileen Burbidge, founding partner at Passion Capital and founder of NFG Ventures. Now, coming up, Namibia has upheld its decision to deny Starlink a license to operate in the country. We'll bring you the details on that story next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Abir Al-Omar in Dubai. Namibia has upheld its decision to deny Starlink a license to operate in the country. The country's communications regulator rejected more than 600 appeals and said only 2 met the threshold for review. But neither presented enough grounds to change the original decision. Our chief Africa correspondent, Jennifer Zapasaja, joins us now from Johannesburg. Jen, good to have you on. Why did Namibia turn down Starlink's license bid, and what were essentially the key issues in this?
Well, we can point to a number of issues that Namibia pointed out, Abir, in particular as it pertains to Starlink. First of all, it really comes down to the legal and regulatory issues that Namibia saw with Starlink's compliance. And really, it's similar to what we've seen across some of the African countries, but mainly here in Namibia, they require operators and telecom operators to be at least 51% owned by Namibians, and what they said in their regulation is that Starlink, which is found to be true, Starlink was fully foreign-owned and had not secured any exemptions to prove as such. We also saw the authority citing some concerns relating to national defense, public safety, and also what they called as broader regulatory compliance issues. In particular, Starlink previously had operated in the country without a telecom license. So as you mentioned there, a number of appeals that Starlink and others had tried to make in order to be operational in Namibia, but it didn't seem to work at this point in time here in the country.
And Jen, what is the demand like for Starlink in Africa? Have other countries there relaxed rules to attract the Musk-backed company?
Yeah, you know, it's interesting, depending on where you look on the continent. We have seen a number of countries. We should remember there are quite a few parts of the continent that are still not connected. And so many do see Starlink as an entrance into being fully or more connected throughout some of their parts of their country. And so we have seen places like the Democratic Republic of Congo. We also saw Lesotho and Zimbabwe relaxing their own local ownership rules to adapt to and adjust to Starlink operations there. What's been interesting, though, here in South Africa, of course, we know the owner of Starlink, Elon Musk, was born here. It's still been quite a debate, and we're seeing local officials right now still taking up whether or not they're going to ease some local ownership rules, which have been in place for a number of decades since the end of apartheid, to maybe see Starlink operating here. It does seem to, though, still be something that Starlink is pushing forward with, wanting to operate here in South Africa. Right now, though, it's still being reviewed.
All right, Jennifer Zapasaja, our chief Africa correspondent, with those details. Now, for a look at some of the other stories we're following today, Kenya has halted construction of a U.S.-funded Ebola quarantine facility. This is after a court found the health secretary in contempt. All work linked to the project has been suspended, and the health secretary said there was no intention to defy the court's order. The facility was intended to house U.S. personnel exposed to Ebola as the outbreak in Congo continues to spread. And Nigeria's Dangote refinery has purchased Middle Eastern crude for the first time. Bloomberg has learned that the refinery bought cargoes of UAE crude from ADNOC for August delivery. Traders say the purchase follows a decline in Gulf crude prices after recent market disruptions. Cocoa prices have fallen after forecasts of rainfall in key growing areas improved prospects for crop development. The decline follows a sharp rally that pushed prices to a 6-week high on concerns about weather risks linked to El Nino. And Morocco's central bank has left interest rates unchanged. Policymakers cited improving economic growth alongside uncertainty surrounding the global outlook and energy prices. The decision comes as Morocco balances rising investment needs linked to Football World Cup preparations with the risk of inflation from external shocks. Morocco is set to co-host the next Men's World Cup with Spain and Portugal. And coming up, Abu Dhabi's MGX raises $50 billion to set up one of the biggest AI funds ever. That is coming up next. This is Bloomberg.
IPO market is getting unclogged, if you will, is certainly helpful in terms of exit. So exits will be important, but I think new investment opportunities will also be important. I think the fact that there is a détente makes, I think, at least a near-term outlook a little bit more stable.
We have R&D hubs around the globe, but China is going to be really based around software and automation. And there's this notion of labs becoming more autonomous or more AI, physical AI ready. And that's where we feel we really want to be at the heart of the innovation here in China.
When the token cost becomes so expensive, people look for solutions. We have 40 million vehicles, EVs, in the market. If you think about the multiplied by that, the power, the energy power and computation power, that's a huge resource. We will tap into that.
Those are some of our guests at the World Economic Forum in Dalian talking about doing businesses in China. Now, Abu Dhabi's MGX has raised nearly $50 billion from regional and international investors to accelerate investments in AI infrastructure and technology. The fundraising underscores the Emirates' growing ambition to become a major force in financing in the global AI build-out. Bloomberg's Nandu Nair joins us now to talk about the details. Nandu, good to have you on. Just how significant is it to have this $50 billion in investment, essentially?
Well, Abir, it's significant for two reasons. Firstly, at $50 billion, like you mentioned in the lead-up, it will be one of the biggest ever AI-focused fund globally. And it comes at a time when building out AI infrastructure and frontier models are getting increasingly expensive. And that gives Abu Dhabi and MGX a space at the table for participating in these big global deals. As we reported yesterday, Abu Dhabi and MGX are already starting to deploy some of the capital that they've already raised. Secondly, this also is sort of a turning point for Abu Dhabi because typically it's seen as an exporter of capital, and here one of its main entities is going out and raising third-party capital. So it's tapped regional sovereign wealth funds as well as global pension funds and institutional investors, marking a significant shift in its strategy.
Nandu, we've reported on these stories so many times. I actually miss reporting on them with your team. But the broader strategy of Abu Dhabi as this global backer of AI, where does MGX fall into that when it comes to this wider Emirates strategy?
MGX is absolutely central to Abu Dhabi's broader strategy in AI, right? So chaired by Sheikh Tanoon, backed by Mbadala, as well as G42, MGX has become one of the most aggressive investors in AI globally. Its investments span everything from frontier AI models like OpenAI and XAI to infrastructure partnerships with the likes of BlackRock and Microsoft. So it's front and center. It set out this target of building out $100 billion of assets under management. And as Bloomberg reported in February, it's looking to deploy $10 billion annually for the coming years, right? So again, this comes at a perfect time. This sort of is a vehicle for Abu Dhabi's ambitions in the AI space.
And how do these ambitions kind of compete with or compare with some other regional or countries in the region like Saudi Arabia?
So everybody wants to have a part in this AI race. We know you mentioned Saudi Arabia. Saudi Arabia has built out Humane, which again has significant investments in XAI. Like in neighboring Qatar, QIA has, over the last 12 months, become an increasingly important part of this AI race. It's got investments in Anthropic. It's possibly invested in SpaceX. So there are lots of broadening race in the region. Everybody wants to have a significant part in this race. Everybody knows that it's critical to their broader efforts to diversify beyond oil.
All right, Nandu, with all those details about the big numbers in Abu Dhabi, that's Nandu Nair, who leads our Mideast Money team. Now, on to some football news. Cristiano Ronaldo became the first player to score in 6 different World Cup tournaments by getting 2 goals in Portugal's 5-0 win over Uzbekistan. Ronaldo made history in the 6th minute and added another goal in the 39th minute. He was named player of the match for his performance. Now, before we head to the end of our show, let's take a look at where those equities are. S&P futures are now turning higher, 0.2 higher. It was fluctuating throughout the whole session, but we're now seeing a little bit more substantial gains. NASDAQ 100 futures are 0.4 higher. This is a rebound after yesterday's 3.3% drop. Dow Jones still lower or a little flat to the downside, and Eurostoxx 50 futures are turning lower as well, again trimming some of the losses earlier in the session. Oil prices still lower today as the ships make their way through the Strait of Hormuz. Brent crude is at $76.5 a barrel, NY crude at $72.6 a barrel. We continue to monitor those negotiations between Iran and the United States. Now that's it for Horizons Middle East and Africa. I'm Abir Abu Omar in Dubai. Stick around with us for Daybreak Europe. This is Bloomberg.